there, Trading Mavericks. This is Rob Reinhold. This is the Trading Room. We are going into monthly option expiration for November, so we will close the books at the end of the week. We'll do payouts, and then we will look towards the last month of the year and then wrap that up in a bow. In this video, we're going to talk about what happened this week. We're going to go through all the markets like we do, break down all the sectors, score all the sectors from +3 to -3. And then, of course, I've got some setups for you, some long, some short, some sideways. We are definitely in a market that is really a coin toss, in my opinion.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
First, we're going to start off with last week. Let's go through all the numbers that we saw, all the news. We got another pullback in the market. So we'll look at the charts, but last Friday, we plunged all the way down to the 50-day moving average, rocketed back up, and then we had a huge surge on Monday and Tuesday. And then it rolled over. It failed to make a new high and rolled over. And on Friday, we were right back down to that 20 or that 50-day moving average. We pierced below it. The buyers came back in. We are now closed above the 50-day moving average, but not much. Not much. We're going to look at the charts here, but I think there's a little bit of danger here. We did get the government shutdown over. I think we can all just forget about it. I know a lot of people were affected negatively, but in the end, this is our government, so it's now back open. Yay! All right. And then we continued to see the AI sector of this market be sold. The rest of the market seemed to be holding up okay. The AI stuff was falling. We're going to take another look this week. Did that hold up? Did the AI stuff fall and the rest of the market held up? Or is there some underlying weakness in everything? There is nothing to talk about because the US government was closed. We are going to start getting some reports next week. So let's take a look at the market numbers, how we closed. And we had the Dow was actually up for the week, up 0.28%. S&P was flat. The Qs were virtually flat. But look at the Russell. The Russell rolled over almost down 2%. Bitcoin and all cryptocurrencies crashed. They tanked this last week, down 10%. So where the rest of the markets, again, when we look at the Dow, the S&P, the Qs, we like, hey, it doesn't look so bad. We take a look underneath it to like the Russell and it looks ugly. Cryptocurrencies looked ugly. Some of the currencies didn't do great. So there definitely is some cracking appearing. However, we're going to look at the charts and we're going to make all of our decisions based off the charts. We had the big pullback all the way down to the moving average. We got that hammer candle. We got a gap up and run on Monday. We got a continuation on Wednesday. We got this little hanging candle here. That's not a big deal, but this was the candle right here. This was the candle we rolled over and then we gapped down, and you can see we gapped down right to the place it bounced last time. It gapped down below the 20 or the 50-day moving average. But you can see we crept our way back up and we got all the way up to the high here, and then we fell back down. We are smack dab in the middle of the moving averages. Now, I want to go through something with you because when I was a young trader, I loved to go short. I still like to go short. I prefer bear markets. I think they're more fun to trade. But I was really excited when I started to learn chart patterns, and I learned the double top, where it runs up, backs down, runs up, hits that same point, and backs down. To me, oh my gosh, I always wanted to short those because all the examples I had seen were where the markets fell apart. I started trading, and you know what happened most of the time to double tops? They pull back and then they broke out to new highs. And sometimes you would even get a triple top. And triple tops are supposed to be even better. 3 times it got to that level and it couldn't break through. That surely is such hard resistance. Here's what I've learned. The more a line is challenged, the more likely it is to break through it. So for me, a triple top is now just so clear that it's going to break out higher. A double top is like, hey, this is probably going to break higher. I am no longer the opinion that that chart pattern really means it's bearish. Yes, there are some examples, but for the most part, when something hits levels a couple times, it's really telling you it wants to go through it. And here we are on the downside. We've come down, hit it once, bounced off it, failed to make a new high, came back down, bounced off it again. The more it bounces at this level, the more likely it is to break through it. So I'm looking at this. The fact that we failed to make a new high is telling me, we haven't broken yet. We're still in between the moving averages. We still have rising moving averages. Enough bullish stuff is still there to say you can't bail on the bull market yet. But there definitely are enough warning signs for your hairs on the back of your neck to go up and say, hey, maybe I should worry a little bit. We've been looking at the RSP a lot lately. We've been looking at the RSP because the 11 largest stocks in the S&P are now 40% of the S&P. So we've been using the S&P to see, okay, well, how is the average stock doing? This is the S&P 500 equally weighting. Each of the 500 stocks has its own equal weight. We had a big rally off the bottom, and it really held support. And you can see the RSP has basically just been sideways, trading between highs and lows. We got a rally on Monday, a rally on Tuesday, and we even went up on Wednesday where the SP went down. We got hit on Thursday. We gapped down, and I got to say, this isn't a great candle. It's not a great candle. We lost a lot of the intraday gains. Yes, we rocketed off the bottom. By the end of the day, we'd come back down. To me, my hope, and what I've really been saying for the last week or two was, hey, the AI stocks are in trouble, but the rest of the market still looks pretty good. And it still was acting pretty good. This chart is telling me, when we look at the equal weight, it's still not great. We aren't seeing outperformance. We're seeing pretty much average performance versus the S&P. So I cannot get too excited about the average stock as well. Now, that being said, there's always going to be pockets of strength. Healthcare was fantastic this week. Absolutely fantastic. That was our favorite sector anyway. And energy was great. Materials was okay. But you can see everything else, lots of selling in these, the big high tech names here. And a pretty intense selling in the big banks as well. Let's talk about next week. We have not broken the bull market yet. And we may never break the bull market. Well, eventually we will, but we haven't broken it yet. We have 2 points on a chart. 6650 is the low. 6850 is that last high. If it breaks above that, we're going to go up and test all-time highs. Which one of these is going to break first? I am not willing to stick my neck out and say, I think this is going to happen or this is going to happen, because I think it's a coin toss at this point. I think there's enough reason to be worried about this bull market. We are in a period of time where we've seen some pretty nasty falls at the end of the year. 2018 was one of them, where we had a 25% sell-off from October to December. I don't think it's going to be that nasty, but I'm saying the clouds are there. The clouds are there. I think we can't ignore the clouds. We also got a few Fed governors that came out who we thought were going to be fairly dovish. They gave speeches this week and they said, no, we think we're probably not going to cut in December. So the odds went from like 98% down to 68%, and now they're at 46%. The bond yields are moving higher, which is negative for stocks. The dollar is strengthening, which is negative for stocks. So again, you cannot say this bull market's over. You cannot say that we still don't have reasons to be bullish. We do. But the clouds are definitely there. And when clouds are there, you just take precautions. Look at this calendar. We actually have things on the calendar to talk about. The government is reopened, and it looks like they are going to release the employment report. I don't know if this is for September or October. I have no idea. So look that up if you care. But it looks like they're looking for 22,000 jobs was the previous. We got ADP that was slightly better than expected, like 40,000 jobs. We'll have to see what happens here. But Thursday, this is going to be coming out Thursday before the market opens. So this is going to be a mover. I think this is likely going to move the market at least 1.5%. I think the first part of this week is a little bit mellow. And then that Thursday, I think Thursday is the big news. And I think that is the time when we will see 66.50 break, or we'll see 68.50 break to the upside. I think until then, we're stuck in the range. So let's go score this market. We are below the 20, we're above the 50, and the two slopes are moving higher. That leaves us at a +1. This is where we were last week at a +1. Let's go ahead and score all of the sectors so we can see where we want to be hunting. Last week, as you can see, there were just a couple standouts. Healthcare, which was our +3, the only +3 we had, skyrocketed. It looked great. It did great. Great job to everyone who was in there. And then we saw materials and energy strengthen. Materials has been pretty weak. Energy has been fairly strong. Outside of that, you can see not great. Not great price action. Lots of selling across the board. So let's take a look at them each individually and score them. We have utilities. We're between the moving averages. And one is going up, one is going down. That is an automatic 0. Communication services last week was a -2. I left it at a -2. You could have made the case that, okay, these moving averages that were flattened last week have turned down. I'm going to give it one more week. Look, -2, -3, it tells me to be short. It's not really a big deal when I go from -2 to -3. But I'm going to wait one more week, see if we can break below that prior low. This is the real estate sector. This was at a 0 last week. We closed the week on this candle where it said, hey, we're close enough. We're close enough to this range here. You can see we came up to the moving averages, fell down, and we now have moving averages starting to slope lower. It's just starting to tell us this is weakening, so I'm going to go to a -1 on this. One more down week, we'll go to -2. Look at healthcare. Healthcare looked great last week, and I talked about how great the candles looked. We had 5 green candles last week. This week, we have 4 out of 5. Just a great, great looking chart. Yes, this is a shooting star. We're probably going to have a pullback. Definitely in need of a pullback, but we're still at a +3. We still like this sector to be stronger than the rest of the market. Industrials last week was a 0. And it's going to stay to 0. Moving average is flattened. We haven't made new highs or lows. And it's a 0. And we can basically say the same thing for financials. We're right there at the moving average. Moving average is flattened out. That's a 0. Next up is consumer discretionary. It was a 0 last week, and it's falling to a -2. As you can see, we are now down at the October lows. We'll probably get a little bounce there, but definitely weakening in the consumer discretionary. Consumer staples was one of our sectors that actually strengthened. Look, it's gone from a -3 to a -2. So it's still weak. I still like this sector to be bearish in for sure. Technology, where are we? We're right between the moving averages, but the moving averages are sloping higher. So we're going to downgrade this to a +1. Here is the materials sector. It was a -3. You can see big rally back up into the range, but it fell back down. Moving average is still falling, -2. And here's energy. And energy's really made a nice turnaround because we broke out of some resistance, but look, we held. We held on a pretty ugly week, and we closed at the highs on Friday. We're going up to a +2. This is where our sectors were last week. 3 sectors get an upgrade. Consumer staples materials go from terrible to still fairly terrible. And we have energy go up to +2 to join healthcare as one of the strongest sectors. We've got 3 sectors downgraded. Industrials fall to 0. Consumer falls to -1. Real estate falls to -2. So there's no question again where the strength is. Energy, healthcare, that's where the money is going on the long side. Technology is still holding in there pretty good. What's not holding in there good is comm services, real estate, staples, materials. I think these are the sectors you want to be short.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Let's jump into our trading slots. Last week we had 6 positions expire. We had 4 winners and 2 losers. So the first one, we had a Reddit butterfly. So on Reddit we had a 180, 200, 220 butterfly. And Reddit closed at like 193. So it wasn't a max gain, but it was a pretty decent gain. We also had bearish trade in BEKE, KE Holdings. That was a max gain. We had our trade on the biotech ETF, XBI. That was a max gain. The industrials, Kratos, cratered, fell apart. That was max loss. Our butterfly on EQT, it rocketed up out of the top of our range. But we did get a max gain on our consumer staples play on Mondelez. Actually, not quite max gain. It closed a couple pennies above our strike price for max gain. Overall, again, another good week. Things are rolling off, putting money in our pocket. This leaves us with only 4 trades. I always am talking about the slot system. I know not all of you are trading the slot system, but I love the slot system because it gives you guidelines. You can't get too bullish until the market tells you to. You can't get too bearish until the market tells you to. And you're going to be focusing on where's the strength, where's the weakness, making trades in strong sectors on the long side, shorts on the weak side, and it just gives you extra little edges. We are still at a +1 with same place last week. So here we are. I'm going to put on 4 trades this week. Now remember, in the slot system, you get to choose how many trades you fit. In this system, we have up to 15 slots available. So with the markets at +1, it says, hey, you can have 2 +2 trades. +2 trades are moderately aggressive. +1 trades are mildly aggressive. So it really tells you, okay, this is where you want to be. And then what we want to do is we want to fill those slots with the right trade in the right sector. I like comm services short, so I'm going to be entering a -1 trade in comm services. I like healthcare long. I'm going to go a +1. I like energy long, a +1. And for my -2, I'm going to go consumer staples. The other thing you have control of is how many trades you make. You don't have to make all 15. When the market is less clear and I'm less clear on the direction, I shrink my capital allocation down. I don't put as much capital out. When I'm a little bit more confident and the markets are really trending in a direction I really like, I'll put way more capital out. This is just another way to get an edge. Let's take a look at some potential trades in some of those sectors. First sector we're looking at was a short or a bearish trade in the consumer services sector, not consumer services, communication services. And I came across Meta. Now look, it's Facebook. I refuse to call it Meta. It's going to be known as Facebook. I know I'm stubborn that way, but sorry, Zuckerberg, it's Facebook here. One of our favorite patterns at Maverick. We call it now the belly flop. What the belly flop is once there's been a very strong stock that makes all these highs, and then they have a really lousy earnings report, and they drop. If they drop and they don't recover, now typically in the belly flop pattern, they sit here like this, and then they just seem to fall right out of that bed. One of our favorite patterns called the belly flop. It was named by our traders. I didn't have a name for it. I called it first stage downtrend. And I said, that's got to be a better name than that. But look at this one. This one isn't even going sideways. This thing is just floating down on a falling base. Okay, we got a bounce on Friday. That's great. We got a bounce last Friday as well. To me, I'm looking at this and saying, okay, I want to be negative this one. I want to be bearish, but I predetermined I'm going to be a -1. Now I'm going to be going out 2 weeks. I'm going to be going out 2 weeks. I've got a bunch of stuff that already expires next week. So I'm looking at the 620, 610. That is not a very bold trade. And a -1 trade shouldn't be a bold trade. This is going to be mostly theta. Here's the great thing. It's November 28th. We have a half day on Friday the 28th, and then we have the market close November 27th for Thanksgiving. Any trade you make that is theta positive over days where the markets close works in your benefit. Now, again, a little bit, but it works in your benefit. So I'm looking at the 620, 610 bear put spread. I'm probably going to pay like $6.50 on it. That means I have a $3.50 upside as long as the stock stays below 610. So Meta or Facebook in that one. Healthcare, GlaxoSmithKline. Now again, they've changed the name on this one to GSK. I still call it GlaxoSmithKline. Sorry, old school here. One of the things to look at when you see a stock chart that looks weird like this, like lots of gaps and lots of small candles, just by looking at this, you can actually tell that this is a foreign company. This is an ADR, American Depository Receipt. What this means is this stock trades here and it also trades over in Europe. The reason why you get big gaps and then little candles is because this stock pretty much trades off whatever happened in Europe. So when Europe is about to close, America opens, and so it's going to gap immediately to where it's trading in Europe. And then when Europe closes, this is a European company, so it's not really actively traded here in the US. So it's going to likely stay around the same price until it closes here in America, and then it opens in Europe. It has big movement, and then a big gap in the US, and then very little movement. Regardless of that, you can still play them. You just need to understand that these are going to be gappy. They're going to gap almost every single day, and there's also going to be very little movement during the day. But with options, we can absolutely play this, and this is just a beautiful high base. We high based here, and then we broke out with earnings. We high based here, and now we've broken out. Now people are going to look at this last candle and say, Rob, I'm worried about this one. This was a dividend day. If you take a look down here, there's a D for dividend. The stock was actually down the exact amount of the dividend it paid out. So it drops on the day of the dividend. This candle is really up here. This candle should be right up here. So it looks great. It looks absolutely great when you account for that dividend. I'm really looking for this one just to stay strong. Remember, I'm not looking for a breakout and run. I'm looking for a, hey, I think this thing's going to hold up. I'm looking at the November 28th, 46, 47.50 bull call spread. It's going to cost me probably 90 cents, and then it's going to give me 60 cents of upside. That's what I'm looking for in this sector with the +1. Consumer staples was the sector I wanted to be the most bearish in. So I'm looking for a most bearish trade, and I come across the belly flop again. A stock that had a pretty good run up to new highs, had an earnings report that was terrible, and then could not bounce at all. Even after people got to digest the news, think about the news, people saw that earnings report, and a week later they're saying, oh, that was really bad. And in fact, you can see that today it's like, oh, this is even worse than we thought it was last week. So looking to come down here, I'm looking to be a -2. So I am looking to be a little bit more directional on this one. I'm looking for the 44.40. The stock right now is roughly around 43. That tells me I'm going to probably, on this $4 spread, it's probably going to cost me about $1.50, but I'm going to have a $2.50 upside. So again, I'm looking for that delta. I'm looking for that move down to 40, and I'm going to give that 2 weeks on Celsius. And then in energy, I wanted to be bullish. I wanted to be a +1. So again, I'm not looking for a runner. I'm looking for something that's going to hold up. This is PBF Energy. This is a U.S. refiner, made a new high, had a 2-day pullback. We got a little green candle here. Look, I have no idea if this is a long enough pullback. I don't know if it's going to make a new all-time high. But what I do like about it is this thing is cranking. This thing actually strengthened well before the energy sector broke out. Remember, the energy sector just barely broke out this last week. This thing's been moving higher for the last month. There is money coming into this, so I want to be long here. There's only monthly options on this, so I'm going to be doing the diagonal call spread. The December 19th, 35, the November 21st, 40 diagonal call spread. And then if it is breaking out and running, I'm just going to hold these December 19th, 35 calls and see where this thing can go. If it doesn't break out, then I'll probably turn this into a vertical spread and sell the December 40 and just turn that into a vertical on this one. If you want to be a little bit more bearish, I think you can go for a target of 43 on this one, but you'll have to go all the way out to December 19th. That wraps up the trades. Let's talk and wrap this up. Okay, I think there's clouds on the horizon. That doesn't mean that it's going to be a disaster. That doesn't mean anything. But I think we have to look at this and say, okay, we've had this really big bull market, and we've been very clear about how bullish we are. Hey, the market's bullish. The market's bullish. We've had a little test here and there, but our scoring has not been below zero since last May. Since last May, we've either been at a +1, +2, or +3 on the markets. We're now at a +1, and I think, again, there are reasons to be concerned. There are some clouds out there, but technically speaking, the bull market is still intact. It's still intact. If we break below 66.50 and we can't recover it quickly, that would be my signal that we have switched from a bullish market to a bearish market, and then we're going to change into being net bearish on our trades. Until that happens, we have to stay neutral to net bullish. We have to. The slot system is designed to make it to where we have no choice, but we have to. I think this market is a coin toss this week. I've been doing this a long time, almost 30 years now, and there's some times where I'm very clear on exactly what the market is doing. And there's sometimes where I come and say, hey, you know what? I think I could flip a coin and probably be more accurate than my opinion. And that's where we are this week. So I think we'll have our answer by the end of the week. I think that big move comes on Thursday on the employment report. And I think we're going to have our answer of, is this bullish move over, the one that started last April? Or does it still have some legs to go? Thanks for joining me, everyone. Have a great weekend. Goodbye.